Good morning, good evening, good night. We're watching this transmission. Tis I, Mike Martins. Thanks for joining me for another housing rant. And this one's coming out of Canada. And this is kind of important because, this is the prelude to a crash. A video I did a few months back, and it's starting to come to light. Canadian non-bank mortgage lenders held over 34,000 overdue mortgages. That's a lot of overdue mortgages. So let's find out what the statistics say here. It's from 2 days ago, the article. Canadian real estate owners are turning to non-bank lenders. So now when you turn to a non-bank lender, a lot of the information isn't disclosed. A lot of non-bank lenders do not follow federal rules sometimes, and some of them don't follow provincial law. So some of them are under different jurisdictional laws. So everyone walks into a non-bank lender thinking that is just like the bank when it's really not. So watch out what you sign for, people. Statistics Canada, StatsCan, released the first results of its survey of non-bank mortgage lenders. Unfortunately, since its first survey, historical comparisons can't be made. Though it does shine a light on relatively opaque industry. The most interesting insight revealed is how many households are on the brink of delinquency. Remember, guys, mortgage GDP per family or per household, what they're making as to what they're spending. For every dollar they make, they owe $1.75 back. So people are behind. Australia is the highest at 200% or 203% now, and the United States is 125%, I think. So people are just basically treadmilling or serfdom. They're stuck in serfdom, if you want to call it like that. Non-bank mortgage lenders are a big part of the Canadian real estate industry. In Q4 of 2018, non-bank mortgage lenders held over 1.7 million residential mortgages. The value of the mortgage debt adds up to $325 billion. At the end of the same quarter, these lenders sound unofficially, but they're a huge segment of the country's borrowing. The biggest difference from consumer perspective is you have to get one of these from a mortgage broker versus traditional banking. Being a non-deposit taking institutions, these lenders don't usually have branches. So what they do is they borrow the money. These institutions borrow money for a higher rate, okay, to be able to lend it out at higher rates back. So these institutions take a bigger risk because they're borrowing. They don't have depositors, and at these astronomical rates, and then they re-lend the money at even a higher rate, right? Non-bank mortgage lenders sound less legit, but they're incredibly important to the market. They provide liquidity. The increased liquidity and competition helps to keep rates low. In fact, some non-bank lenders have lower rates than traditional banks. For example, the country's largest non-bank mortgage lender currently has lower rates posted than the Big Six bank. That isn't to say that they're always better than the bank. Some provide nosebleed rates, and that's what I'm hitting on. It's usually nosebleed rates you get into, but they aren't always worse either. Non-bank mortgage lenders held over $325 billion in debt. Non-bank mortgage lenders held over a fifth of institutionally held mortgages debt. The lenders held $325.5 billion in mortgage debt, spread over 1.7 million mortgages. Uninsured was $188 billion of the total, spread over 1.1 million of the mortgages. That works out to 57.8% of the value, over 65% of mortgages. In other words, more than half of debt is not insured. So when you go to a secondary mortgage place, usually it's not insured, right? So Canadian non-mortgages outstanding. The balance of mortgage debt held by Canadian non-bank mortgage lenders in Q4 2018 by insurance. So here it is. Uninsured, insured. This is in billions of dollars. It's 150. I think it says here, hold on. $188 billion. And then this is $137 billion insured. This is not good, guys, because once these people, some of them are getting let's say half are getting nosebleed rates because they couldn't get anything at the bank, so they find a broker. Broker tries to find them what they could get them so they don't lose their house or they don't lose everything, right? Over 152,000 new mortgages issued in Q4 of 2018. Non-bank mortgage lenders are showing huge growth in Q4 2018. Non-bank mortgage lenders extended 152,554 mortgages, which represent 9% of the total mortgages held in the quarter. The value of those mortgages was 39.3 billion, representing 12.1% of the total value of mortgages held. Whew, that's a mouthful. There were 93,171, 61.1% of uninsured mortgages issued, that number worth 22.8 billion. 58% of the debt, unfortunately, since this is the first survey data published, we don't have year-over-year growth, though increasing the amount of mortgages by nearly 10% is a huge growth metric by itself. So this is what they have for, this is the first time we're getting an information on this that's clear as day, that we could send out to you guys. Canadian non-bank mortgages extended Q4 2018. This is the dollar value of mortgages extended by non-bank mortgages and lenders in Q4 2018, insured, uninsured. Wow. Okay, let's go StatsCan. The new mortgages extended in the most recent quarter were substantially larger than the average held. Uninsured mortgages extended had an average value of 244,617 in Q4 2018, 43.86% higher than the total average. Insured mortgages extended the average value of 278,537 in Q4 2018. That's 20.66% higher than the average of the total held. Yes, the existing mortgages likely paid down by a substantial amount on their mortgage debt. Still, nearly 1 in 10 mortgages held by a non-bank lenders were extended in just the quarter. So you're gonna see. So you've seen the patterns that people are going to more and more uninsured / risky lenders / brokers / there's all kinds. There's all kinds that's happening, and we've covered a ton of stories here on this channel. Over 34,000 mortgages were in arrears in the quarter. Finally, Canadians now have some insight into the number of mortgages in arrears at non-bank lenders. There were 34,638 mortgages in arrears in Q4 2018, representing 6.4 billion in value. Wow. That's a huge loss right there. Uninsured mortgages represent 21,641 of the mortgages, with the value of 4 billion, or 62% of the value of numbered mortgages number of the mortgages. The ratio of mortgages in arrears are 2% for both number of the mortgages and the dollar volume. For those unaware, a mortgage in arrears means the borrower is overdue by at least a day. Okay. So there's R1, R2, R3, R4, R5, up to R9. So R1 would be a month behind, R2, 2 months, R3, R9. Up when you get to R9, you are 9 months behind, and then they start foreclosing. They start going to court and all that stuff, and then they start putting liens. Oh, it becomes a nightmare. More serious mortgages arrears on par with traditional bank lenders. There are 4,249 mortgages in arrears over 90 days. Wow. Q4 2018 with combined value of 930.4 million. Only 2,524 of those were uninsured, with the value of 587.2 million. Mortgages in arrears over 90 days represent 0.25% of all mortgages held by non-bank lenders. The ratio of mortgages in arrears over 90 days is the same of those published by the Bankers Association. So this is the Canadian non-bank mortgage in arrear. The total number of mortgages in arrears overdue by Canadian non-bankers. So uninsured in arrears, 21,000. And then uninsured in arrears, 90 plus days, 2,000. And that's total. And then total in arrears, and then insured, 1,725, and 12,997 insured in arrears. The hidden gem here is the difference between mild delinquencies and severe. Credit agencies warn that more late payments made, the higher the risk of default. It might seem innocent when a payment is only 30 days overdue, but borrowers that are behind on payments more vulnerable to shock. But to put it bluntly, there's households finding it hard to make payments when times are good. what happens to those households when times get rough? So we're still, the whole media is paraphrasing this whole thing as, it's good, economy's good, we're creating more jobs. People are borrowing and extending their mortgages and getting HELOCs and getting themselves trapped into these positions and these circumstances that are incidents. These incidences are arousing from circumstance, and it's no longer the case where people are in a position where their hands are tied. What are the good times? How are these a good time? What's going on here? I was told, why did the bank do this? So now you're going to have this huge banking blame game. Do I blame the institution for giving me this and they know I couldn't pay it back? I could tell you, I could look at someone's credit score, I could look at someone's credit history, I could look at someone's debt load, and I could tell you exactly when this person will default. I could tell you and look at this guy's credit score and look at his application, look at what he's carrying, and I could tell you, okay, this guy's going to go in 6 months, this guy's going to go in a year, this guy's going to go in 3 months. And no, it's a bad thing because a lot of these people need credit counseling, not more credit or more extension or more, you know what I'm saying? Or restructuring. Sometimes some of this restructuring, a lot of these people are credit fiends, right? They get a consolidation loan, a second mortgage. They pay off all their credit cards and student loans and lines of credit and auto loans, finally get it all paid off and have 2 payments, their mortgage and their payment. And guess what? They take those credit cards and use them all back. And then they're in a big trouble, and I've seen that many times in my lifetime. Many times, one too many times, and then people get a third mortgage and a fourth to consolidate all those credit cards. And before you know it, because their TDS fits, you take the blended rate, you give them a second mortgage, the TDS fits, it lowers their blended rate, it lowers their blended payment, and it cuts down the payment to 2 payments, their mortgage and their all that other crap. Then it's this, and then it's this. Then they start using the credit cards again, and then their TDS gets out of whack. They apply for a third mortgage or an extension on their HELOC or an increase on their loan to see if there's more loan to value and see if they can take more money from their line of credit. Sorry guys, it's just been a long day, guys. I'm moving my shop. I got a lot going on. Let me go to my YouTube channel. Guys, if you want to check out my channel, please go ahead and subscribe. If you'd like to, please go to share one of my videos if you want to get me out there. Mike in the Night was really good. Mike in the Night, middle class can't afford food from last week. That's a really good one here. Mike in the Night, what's happening in crypto? So go to my channel, check it out. There's Mike in the Night. There's trends in the housing market. There's morning coffee with Mike, housing crisis video. Check it out, guys. And if you want to support me on Patreon and you like my work, please go ahead and support me with my morning coffee. All the money that gets donated goes towards coffee. I don't make much. I only have 10 followers, but you know what? I'm happy. And I'm very grateful for my 10 followers. Let me know what you guys think in the comments below. 34,000 mortgages overdue. Yes, it's going to happen. And will it get worse? It has to. Mathematically, things will get worse. Why? Because we're making nowhere nearly enough that we should be making. Check out this video, guys. I'm actually going to put it at the end of this video. This one right here. Wages versus productivity explained. You want to see this one. This one's really good. Anyways, guys, thanks for watching. Have a good night. And don't forget to hit the subscribe button.